Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. Thanks to Policygenius for sponsoring this video, but more on that later. So today's video, I'm going to teach you how to buy a Treasury bill, whether it's through Treasury Direct, straight from the government, or you can buy it through a brokerage like Charles Schwab, which I'll be using in this example. I'm also going to show you what a T-bill actually is. So you're going to learn a quick definition of what it is, because some of you have heard of it, but you may not know exactly what it is. And then also I'm going to show you how to calculate the yield and how these yields actually work and how the auction process works for these. So without any delay, let's get right into it. So a Treasury bill, aka a T-bill, is a short-term debt obligation backed by the U.S. Treasury Department with a maturity of 1 year or less. So these are typically sold in denominations of $1,000. You can actually reach a maximum denomination of $5 million. This third bullet point is actually not true, and I'll show you why. It is true most of the time, but not at the time of this recording. The longer the maturity date, the higher the interest rate that the T-bill will actually pay to the investor. Right now, we're looking at an inverted yield curve, but that's beyond the scope of this video. So let's actually get into where to find these rates and to see what these things actually yield. So this is treasurydirect.gov. It's an okay website. The process is kind of antiquated for buying, but it's actually very simple. Some people love it, some people hate it. I personally am indifferent. So these tabs right here are actually showing you what the term is, meaning the length of the duration of whatever you're looking at. So you have bills, you have CMBs, you have notes, bonds, the tips, FRNs, you have a bunch of stuff here. We're going to be focusing on bills in this video. So remember, there's bills, these are less than a year. You have notes, these are basically 2 to 10 years. You have bonds, 20 to 30 years. So we're focusing on T-bills. These are less than a year. Some people, they look at their savings account and they're like, man, I'm only yielding, 2%, 2.2%, while inflation is, 8, 9, 10%, for example. Some people have been looking into I-bonds, which I most likely will make a video about. Other people, they're scared to put their money in the stock market right now, so they're looking for something a little bit more safer with less return and less risk, which this fits the bill. No pun intended. Oh, T-bill.
Bruh.
Okay. Hold on. Where's my... Never mind. Sorry. So what we're doing here is we can see right here the term of the bill. So you have anywhere from basically 4 weeks, literally 28 days, all the way to 26 weeks, okay, which is basically 6 months. So you have the ID number right here. You have the issue date when the bill is issued, and then you have the maturity date. So common sense, if you look at one that's issued on 10/18, 28 days later is November 15th, okay? The investment rate right here is basically your yield, but since this is Whiteboard Finance, you can't just be, a dummy and not know where these numbers are coming from. So I'm going to show you how to figure this out. So let's say we're looking at this past 4-week auction. So this one was issued on October 18th. It is the 20th at the time, or the 19th at the time of this recording, excuse me. So this is already done and issued. So I'm going to click on that, and we're going to see how to figure out this interest rate and how these numbers actually work, okay? So we're looking at the 4-week, okay? The auction date was the 13th. This is when you're starting to bid on these bonds, or these bills, excuse me. 18th is the issue date. 15th is the maturity date. This is the number that you actually pay. This is the important number, so let me zoom in here. So this is the price you pay in order to receive $100. So you're receiving at the end of these 4 weeks $100, but it's only costing you $99.747222, okay? So let's keep this number in mind, $99.747222. So what we're going to do here is we're going to take $100 minus $99.747222. That gives us this number right here, 0.25, okay? So why am I showing you this, and why does it matter? Because if you take this number, this is basically what the interest or the total money you are making off $100 over the course of 4 weeks. So yes, you're making literally 25 cents. What you want to do is you want to divide this by 28 so you can get your daily rate or your daily number, which gives you 0.009. You're going to multiply this by 365 days in a year to annualize it, and you're going to actually divide this by 99.747222 to get this number right here. I can't believe I remember that number. So remember this number. You move the decimal place over once, twice, tens, hundreds, multiply it by 100. This should be the rate. It should be 3.303%. So if we go back here, what's the 4-week yielding? Boom, 3.30%. So that's how you figure out the math. You don't need to do that, but it's important to actually understand what you're getting yourself into and what your yield is going to be annualized over the course of those 4 weeks, those 28 days that you're holding this. If you were to hold it for 365 days, that is the rate that you would get. You're only holding it for 28. Makes sense? So now we're going to go into Charles Schwab, and I'm going to show you how to actually buy one of these things, and this is going to be a lot easier than the math portion that I just showed you. So if you go to trade, you go to bonds, you have this on Fidelity, you have this on TD Ameritrade, you have this on Schwab. There's a bunch of different ways you can do this. It's a lot easier to buy it from the broker. A lot of these brokers don't have fees. They're not going to charge you anything to buy, CDs, bonds, treasuries, things like that. So what we have here is Charles Schwab's fixed income offerings. You have CDs. These are certificates of deposit. You have the time frame up top right here, the duration, and then you also have bonds. You have treasuries, you have government agencies, you have corporates, municipals, et cetera, et cetera. What you want to do is you want to click down here in the bottom left hand and click on Treasury Auctions, and that'll actually take you to a page where they're offering new issues, if you will. So what you want to look at is new issues. You want to look at these offerings right here. So what this is basically showing you is pretty self-explanatory because we just kind of explained it. So you have the auction date. Okay, that's the day that they're going to basically figure out what rates you're going to get for these things, the rate that we just used to figure out that 3.3%. You're going to have the maturity date, okay, which is 1 month, 3 days from now. So remember, there's an auction date, there's an issue date, and then there's a maturity date. These are 28 days. Some are longer. You have this one that could be an 8-week T-bill, 2 months and 1 day. And then you have tips, which is not in the scope of this video. So just because I showed you the 4-week, we're going to stick to a 4-week. So what you want to do is you want to click buy. And when you click buy, it'll actually take you to the page that explains everything about this T-bill, okay? So you can see here that the available cash to trade in this account right now is $2,900. Remember, these trade in increments of thousands, okay? So I can buy 1,000, 2,000, 3,000, 500,000, 5 million, for example. I'm just, for the sake of this video, I'm going to maybe I'll even buy 1,000. I don't know. It's only 4 weeks out. Who cares? So I'll buy $1,000 for my viewers. Okay. Maybe you can like and subscribe and send me money. I don't care. I'm just kidding. So what you can do from here is you have the ID number. So you'll be able to see this in the future. If you go back to treasurydirect.gov, all of these have an ID number. So you can see the investment rates, you can see the maturity dates, you can see a bunch of stuff. So what we're going to do is we're going to click on auto rollover. So what this does is it'll take the proceedings or the money you make 28 days from the issue date, and it'll actually automatically roll over. So you can tell Schwab to automatically reinvest the principal of your maturing CDs and treasuries on your behalf into new investments for when they mature. It's going to be for the same maturity or the same duration. So I'm going to make my money, the 3.3% annualized. I'm going to make that, let's just call it $2.50 on this $1,000 or whatever that number is. And it's going to actually roll that automatically into the next 4 weeks. So if I choose to go that route, that's what it'll do. For the sake of this, I'm just going to click no because I don't want to tie up that much money for 4 weeks for no reason. If I'm going to do this, I'm going to build probably a bond ladder or a T-bill ladder. I may just make a video about that after this. I'm not going to tie up any more money into this if I don't have to. So this is just to show you how it works. So you have a market order. That's the only type of order you can do on this. It's no different than buying stocks in a market order. This means you'll get the price or the T-bill at whatever interest rate is dictated in the auction. You have the timing, which is day only, expires at the end of the day if it's not filled, and then you just click review order. So what that's going to do is it's going to basically summarize everything you have. $1,000, this is the ID. Market, day trade, auto rollover, no. Settlement date 10/25, maturity November 22nd. So that's those 28 days. Makes sense? So if I want to place this order, I would come down here. click place order, make it green, order received. There you go. So you have the order number, all that good stuff. So that we just bought $1,000 worth of a 4-week T-bill. Okay, so what you can do if you want to actually buy less than 1,000, you can go to Treasury Direct, which I'll show you right now. But before that, let's hear a word from today's sponsor, Policygenius. If you have anyone relying on your income, you need life insurance. It's that simple. Policygenius is your one-stop shop to find and buy the insurance you need at the right price. It's essential to have life insurance because mortgage payments, child care, and other expenses don't disappear when you're gone. Life insurance through your workplace may not be enough protection for your family's needs, and it won't follow you if you leave your job. My wife and I personally use Policygenius to find our life insurance because if something were to happen to us while traveling, we know that our little girl and our family would be covered. Policygenius was built to modernize the life insurance industry. Their technology makes it easy to compare life insurance quotes from top companies like AIG and Prudential in just a few clicks to find your lowest price. With Policygenius, you can find life insurance policies that start at just $17 per month for $500,000 of coverage. Policygenius has the agents that can help you find the options that offer coverage in as little as a week and avoid unnecessary medical exams. They're not incentivized to recommend one insurer over another, so you can trust their guidance. There are no added fees, and your personal information is private. No wonder they have thousands of 5-star reviews on Google and Trustpilot. Your loved ones deserve a financial safety net. You deserve a smarter way to find and buy it. Head to policygenius.com/whiteboardfinance or click on the link in the description to get your life insurance quotes and see how much you can save. Okay, thank you for sitting through that. That pays the bills and allows me to make free content like this. I appreciate that. Right now, we are logged into Treasury Direct. I'm really zoomed in because I don't feel like blanking out Marco's account number and all that stuff. It's a pain in the butt during editing. But you can see here, I actually have $10,000 sitting in here. And you're wondering, what is that $10,000? Those are actually in I-bonds. Okay, I bought those I-bonds about 3 or 4 months ago. My wife also bought 10,000. My daughter can buy 10,000. Your business can buy 10,000. Your dog can buy 10,000. Your neighbor can buy. No, your dog and your neighbor can, but it's not going to be yours. There's a lot of ways that you can actually invest in I-bonds, but that's outside the scope of this video. So if you do want to buy T-bills, okay, you just click on Buy Direct. You click on bills. Remember, these are short-term securities of 1 year or less. Then you have notes, which are 2 to 10 years. Then you have bonds, which are more than 10 years. You have TIPS, Treasury Inflated Protected Securities. And then you have FRNs, floating rate notes, Series E bonds. Here's a Series I bond. But for the scope of this video, we're buying bills. So what you get to is basically this menu. So you have way more options to buy T-bills. So the biggest difference between like a regular brokerage like Schwab, for example, and Treasury Direct is that you don't have to buy, you can buy in increments of 100. You don't have to buy in increments of 1,000, for example. And then also you have a ton of options, okay? So we have an auction date for tomorrow, the 20th, with an issue date of the 25th. So that's the one I'll click on. So you can see here, you have the purchase amount that you're going to buy. You have the source of funds, where it's coming from. You can reinvest that again up to 2 years if you want. So remember, this is no different than Schwab's ability to kind of just reinvest those proceeds and keep doing that in perpetuity. This is limited for up to 2 years. And then you have a payment destination. So if you choose not to reinvest that maturity payment, you can kind of pick where you want those funds to go. This is basically just a bank account that you have linked to Treasury Direct. So what I'm going to do is I'm going to purchase an amount of $100 for the sake of this video. It's going to come from this bank account. It's going to go to this bank account, and I'm going to click Submit. So what you have now is a purchase review. So you're going to see your name or the trust or the business or your spouse or whoever's buying this thing. You're going to see the duration. You're going to see when the auction date actually happens. You're going to see when it's actually issued to you. You're going to see how much you bought. You're going to see where the funds are coming from. You're going to see if you're reinvesting it or not. And then you're going to see once it matures, where is that interest payment going. So that's pretty much how to buy Treasury bills. You can do this for 4 weeks. You can do this for 26 weeks. You can do this for 17 weeks. There's a bunch of different durations and a bunch of different options. But this is powerful if you want to earn more than what's sitting in your money market account, for example. So right now I'm with Capital One 360 Performance. I think we're yielding 2.2, 2.3% right around there. You can see that the annualized rate of return for the last 4-week bond was 3.3%. So that's a pretty significant jump up. So if I want to put, $100 grand, or if I had $1 million, for example, you can make a quick, $250 or $2,500 in a month, not even a month, it's actually 28 days, by doing nothing. And these are typically, this is backed by the United States Treasury, unless something crazy or unforeseen would happen. These are incredibly low risk. So if you've kind of been on the sidelines of the stock market lately, with the year to date being down, close to 20%, and it's freaking you out, that's actually a good time to buy. And I just keep dollar cost averaging down. I don't really care what the market does because I'm 34. But my point is I have a long time horizon for stocks. If you are freaking out and you do want to park your money and earn more than what you're earning in your money market or savings account, Treasury bills are definitely a good way to go. I may make a video after this on how to actually do a ladder, meaning you invest a certain amount of money, let's call it $100,000 or $10,000, and you have different expirations mixed into that money. It may not make sense now, but it'll make sense when I make the video. So as always, I hope you got value from the video. I just got back from a 2-week vacation in Europe. It was awesome. A little bit jet lagged. That's why I didn't put out a video for, a week or two. Wanted to spend time with my family and friends and just kind of recover and relax. But the YouTube algorithm is calling, so I got to get back on the content creation hamster wheel. So as always, I hope you got value from this video. Check out the link down below. I'm still working on Whiteboard Finance University. Was kind of offline for about 2.5 weeks when I was on vacation. So I'm kind of hitting the pavement hard and making sure that gets released sometime in Q4 this year. Thank you so much, everybody. As always, have a prosperous day. Hey, what's going on, dude? Nothing, man. I just finished up with the video. What are you up to? Oh, you bought more growth stocks? Nice, dude. What are you doing tonight? Oh, going to the casino? Cool. What are you playing? Roulette. Oh, nice. Worst odds in the casino. What else is going on after that? Oh, you're getting a $700 a month car payment? Cool. Taking out some more loans? Wow, that's crazy. Oh, what am I up to? Nothing. Just bought some T-bills, bro. Living on the edge. That was so stupid.